What's up, my people? It's your boy Nick, HOUTX Trader, right here in Houston, Texas. Today, guys, we're going to do a quick video. We're going to talk about NASDAQ, Bitcoin, and gold. Remember, this is for training only. This is not financial advice. If you need financial planning, please go see a certified financial planner. And, guys, in the link below, make sure you check out my dot card. I just started my own Discord. Okay, guys, it's absolutely free. It's where I put all my trades, and then perhaps I put a little more in depth on why I'm doing some things, maybe a little more in depth than I have been doing in the past with other people's Discord. This is my own venture now, so let's go hard as fuck on that. But still, shout out to all my board apes, my Bit Dogs, Vtopia is killing it right now in the game. Annie Peters Discord, all that stuff is great. Please stop and check out all those guys' Discords as well. But for now, let's get into it. I'm going to share my screen and let's do entire screen right here. Okay, guys. So obviously everyone has noticed that Bitcoin is going bananas, right? And if you do remember, we called out this low down here. Okay, we called out that low, and we also called out this low, and it went crazy. But that's not what we're talking about today. Today we're talking about what is it doing right now? How do we find a trade? Okay, so I've been waiting for Bitcoin to give me some sort of healthy retracement and so that I could take trades, right? So as you can imagine, or you've seen in the past, I've had these markups here. I was waiting for this to give me a dip to fill in these fair value gaps and then go. But of course, it is way too bullish. It is not doing any of that. So this is what I saw today. I did take a loss, but then I turned around and turned it right back into a win. I wanted to talk about that. So the way I'm doing this is obviously here's the move. Okay, so here's the move where it pushed off and came all the way up to the top. All right, so this is where I'm looking at, right? So I drew a fib, drew a fib from the bottom of this area. Get rid of this stupid thing. There to there. Okay. As you can see, I have my buy zone marked off. Okay, so that's first step. Is obviously you know which way the trend is going. You see the last bit of candles, the last bit of consolidation, if you will, before it makes a major push, and that's why I started my fib there. Okay, now what do we see after that? We see a double top here and here. This failed to make a new top. Okay, that rejected that area. So in my opinion, I marked this off as a good resistance zone. Okay, that is a strong double top, and that is I like that. The only problem that I saw this morning is that it did not create a new low. All right, so push off, sold, came back up, test that high, sold. I like this a lot. This is the only problem. That little guy right there. All right. So I'm thinking about that in my head. I fully realize it, but I'm still willing to give this a sell because I like this double top. Okay. So then let's get into a little bit deeper. Okay. So if I fib, sorry, let's get rid of this fib. Now, if I fib this move, the initial push down from top to bottom, I see that I have my sell zone right inside here. All right, that's my sell zone. That's where I'm looking to take entries if it looks good to me. Sell zone. Okay, let's scroll in here. All right. What else do I see? I see that there's like an order block here. You see all these consolidation candles. So there's a reason why I think the market needs to come back up into this area. I also see, we can come to a 15-minute chart, that there's a fair value gap. I mean, look at the bottom of this candle and the top of that candle, even to the top of these candles. Right inside of there is a fair value gap. All right. Fair value gap. So I mark off the fair value gap. This again, we can delete that and mark it as an order block. Right. So we can mark this as an order block. Order block. There we go. Okay. So this looks good to me. If I was to replay this up until, let's say, replay up until right here. All right. Look at what I was looking at this morning. I said, okay, I've got this nice double top. I've got my sell zone. I've got the fair value gap. I got the order block. I want the order block to get taken out. I want this fair value gap to get filled in. Now look what it's doing to this 88.6 Fibonacci. A clear push up and a clear rejection in what's called as a doji candle. I like this. So I'm like, hey, let's take sells. Okay, my stop loss is up here, right above the double top. And now we're going to be targeting these this order block down below, this fairy gap down below, so on and so forth. Okay. So as I see this, hey man, we're good. I like this trade. So let's go forward. Let's see if we can go jump to real time. Let's see if we can go forward one candle. Oh, and I see this. You see that big push down? It comes back up. But look, it's still holding the 88.6. I'm gonna delete that, but you can see it's still holding this 88.6 fib. Oh, I'm still in the trade. Look at that. Wick up, started to close back down, and then it pushed. And that's when I'm like, okay, this is not playing out the way I want it to play out. But again, what's our rule is we don't play triple tops. Okay? We don't play triple tops. Single, double top. We're looking to short in here. I do not want this to come up here because if it comes up there, it's going to keep going. Okay. So when I saw that, I knew pretty much the trade was not going to play out my way. Big wick up, down. As you can see, it broke. So when it broke right there, I said, fine, I am wrong. We obviously know Bitcoin is super bullish. As soon as it broke, I entered a buy. Um, again, I was in a sell here. My stop loss was there. So what I did personally was I say, okay, well, how many pips is that I risk? Right? I risked that many pips. So when I entered the buy there, that's giving me my TP one right there. All right. So then when it hit that same amount of pips, so technically now I'm break even. I moved my stop loss for this buy. I'm just going to clean this up a little bit. I moved my stop loss into break even. So now I know I wouldn't lose anymore. And then when it continued to run up, which it did, let's just go to real time, right? Would it continue to run up, which it did. I then moved my stop loss then to right there. So as it came up here, I moved my stop loss to break even. I moved it up to now there. So now if it does come back down and hit my stop loss, I have now broke even from the loss that I took earlier. That's the same amount of pips. That's exactly what it did. So the market allowed me to get out of my buy trade at the exact same amount that I lost on my first initial sell trade there. All right. So no big deal. I entered the market twice. Once it broke those highs, I said, fuck it, it's gone. Back test this in your own situation. See how many times you've taken an L, and every time it hit your stop loss, what if you would have entered a buy at that exact same position, the exact same lot size as you took on an L and did what I just showed you? I think maybe you'll find a lot of times that you will break even or maybe even make some. Now, technically, this kept going, and when it was up here, I was in profit. I could have closed and been up 2%, right? But I moved my stop loss to this area and said, look, this is the reason why I'm thinking this. If I move my stop loss to here, I'm still in the trade in case it wants to keep going, exponential parabolic, if you will, and keep making money. Like I'm still in the trade. This is why I didn't TP and just close the trade altogether. I moved my stop loss to where my loss was earlier, if that makes sense, right? So I'm still giving myself the opportunity for this thing to keep going crazy. But as of now, as you can tell, it hit my stop loss. Um, I'm in profit and I broke even for the day on Bitcoin. So that's a strategy you guys can look at. Okay. Let's talk about NASDAQ because this is one that we did hit. Okay. So as you guys know, if you've been trading with me a lot, I like three push down, one push, two push. I'm looking for a third push down to get me back into my buying opportunity. So that is my overall idea. I see two legs, one, two. I'm looking for a third. All right. So then let's look at the chart today. Let's just overall big picture. Let's just go out to the 2 hour. So here's where the chart kind of took off. This is the consolidation area here. This is the consolidation area, and this is the low point in which it took off. So what I did is I drew a fib from that low point, as you can see, right, from this low point, from there up to the top, from here. I marked off my buy zone, and that's what I'm looking for. Now, at the same time, I also look at the fair value gap. All right, I marked that off. I noticed that, like, I'm trying to teach myself, or I'm trying to tell myself, why does the market need to come down here? Why? Okay, well, first of all, look at the bottom of this candle and the top of the sell candle here. That is the fair value gap. There's a gigantic gap right in here that I think the market needs to fill in. Now, it filled in some of it right here. Okay, so we can modify this fair value gap to here. Well, guess what? I still have that gap right there. Okay. So if in my mind, the market still needs to come down and fill in this gap. Okay. What do we have? We have the order block that hit the last sell candle before it took off and went to the moon. Now, I'm not saying that it needs to hit that order block, but I would like it to. I would like it to at least come down here and dip into this area, into this candle a little bit, even if it's just a wick and go. All right. So now I'm thinking to myself, okay, I have two lows. I'm waiting for a third. I have the fair value gap that needs to get closed in. I have an order block sitting over here. This is giving me reasons to think that the market needs to push up. So I'm looking for sells. All right. I do realize that we had a trend line that wicked above. We zoom in. I'll just delete this. It wicked above, closed below. That's good for me. Wicked above, closed below. These candles are closing below this trend line. I like that a lot. So I'm like, hey, these are valid sells. Let's go to the 30-minute. Look at this. Okay. You see how it wicked up? Okay. So now again, now I have in my brain that I want the market to come down to here. Okay. So how do I get into sells to get there? Well, let's look at this. Since we're looking at Elliott waves, right? We're talking about three push down. One, two, lower low. I need to find a short into here to give me that last leg. All right. So fib for that second leg, top to bottom, draw out my Fibonacci zones. NASDAQ loves the 88.6. I know that, right? Know your pair, know where your pair likes to reject. That's my sell zone. On the internal time zone. Obviously, this is my sell zone on the exterior structure. On the interior structure, I have this. Okay. Now, what else do we have then? Let's break this down. Well, I have all these candles that are sitting there as liquidity, right? There's a lot of shorts being put in there. So before I enter a trade, I want to see liquidity get taken out. And you could even consider maybe these candles as well as being liquidity. Long story short, in this area, from here to there, I have liquidity, right? All those wicks. I have liquidity. I have the trend line that's just giving me an idea, but I'm not taking trades on the trend line, but I'm using it as a marker. And so when it starts to close down below the trend line, that gives me an opportunity to take another sell and jump into another entry. But we'll talk about that in a second. For now, the trend line is just there for visual reference, okay? So we have the 88.6 fib. We have all this liquidity in here. So I'm going to enter a sell at the 88.6. My stop loss is 10% above this wick or 10% of the overall Fibonacci. And then my TP1 is going to be the double bottom. Okay. So there it is. There's my 3.92, basically a 4-to-1 trade. There it is, clear today. So that's what I hit today. I had a 4-to-1 trade. So now let's talk about this. When it rejected this long candle on market open, rejected and came back down and held the trend line and closed below the 61.8, I got into another sell. I entered another position. So by then, this is my second position. I then move on this position, my 88.6. I move my stop loss to break even. So I can't lose that trade. I moved this stop loss to that exact entry. So now both of my stop losses are at my original entry of there. All right. When this comes down and tests this low here, let me just delete this now. You know where I enter the trade. When it comes down and tests that low right there, I TP1. And actually, no, I didn't TP1. I just closed that trade. So there's my re-entry trade. On the close there, on there. Technically, my stop loss was right there. So it's a 2-to-1 trade or 1.5-to-1 trade. a little internal, little snipe trade. But guess what? That's an extra 1% that I booked, right? So if everything goes wrong and it comes down to here, right, and rejects, I break even on my OG trade. I at least booked 1% for the day. All right. So then what's next? All right. Well, when the market pushes down and gives me this double bottom, I closed out 1/3 of this entry up here, my main entry. So now I put in 1% on the internal trade there, and I put in excuse me, this is supposed to be a 1.5% on the OG entry. So now I'm up 2.5% on the day. All right. And so I still have my original entry up here, and it's still open and it's still running. I don't know what it's going to do, but it's at break even. So we're good to go, right? I want this double now. This double bottom, it's a pretty good, pretty strong double bottom. That might be the bottom. But what we can do now in the meantime is mark all this off, delete all this stuff, right? We now know that this double bottom is eventually going to be a target. So now I mark this off with dollar signs because I know that double bottom is going to get taken out, right? I just don't know when, but it's going to get taken out. All right. So there we go. And then now look at all this liquidity sitting here. All those wicks and all that liquidity that is going to get taken out. Okay, so now we play the game. What's going to happen? Is this going to push up, get into my sell zone, and then target these lows? I don't know. I hope not. What I want to see happen is this rejects this trend line again, targets these lows, keeps going, and then comes up and targets all this liquidity up here and sets all-time highs. Right? That's what I'd like. Because honestly, I'm sitting with the limit order down in here. Wrong way. Excuse me. Buy limit 50% of the order block, and I'm looking for all-time highs. All right, so that's my next move. Again, my stop loss is right below at 10%, and I'm targeting the TP extensions on the trade. So that's my next move. So what I'm trying to do then is to sell to get down to here. We're still looking for this buy zone. All right, that's the next move, and hopefully that holds. That's NASDAQ. That's how we caught that trade. That's why I caught that trade. That's how I managed the trade. That's how I got into a second entry, and that's my next move. So I still have 1/3 up protected. As you know, the entry is like right inside there, and it's protected. All right. So not, let's just let that go. We're looking for gold now. So in the same kind of reason that NASDAQ has happened, right? I see the order block here. I see the push off here. So what did I do? There's the big push. Came down a little bit, but I'm measuring the fib from top to bottom because that's the overall move. All right. So where is this at? Now, gold loves the 78.6. 78.6 is right there and it's already hit it. Okay. But I noticed that when it hit the 78.6 and we come down to like a smaller time frame, that it did not just take off and leave. All right. So there's a 78.6 on the external structure. Guess what? It did not take off. So this is telling me that this is not done. Okay, this is not done. It hasn't got liquidity. What we want to see when the market truly grabs liquidity, we want to see it come down and then take off. That's it. If it does not come down and take off, that means the market has not grabbed liquidity, and there's a good chance it's going to continue in that direction. So that's what we did. Now look, could we have caught this internal trade? By all means, we could have caught it. I called it out in the Discord, but I didn't catch it. I didn't take the trade. Okay. Look, again, 78.6. It hits it, I mean, almost to the dollar. I think it's with like a couple of pennies short of hitting the 78.6, but it's there. You fib from bottom, you fib the move, you wait for a 78.6 retracement, and then you take the trade. All right. I did not catch it. I wasn't paying attention. And even if I would have had my order set at 78.6, it did not hit it. But what did it do? Well, you can see there's a little 30-minute buy candle there. It hit that 30-minute candle. Let's just zoom in a little bit. And what else did it do? You see the bottom of this buy candle here, right? So then we can make like another little box. Let's just delete some of this jazz, right? So we have that, and then we also have the bottom of that candle. I mean, you see how close it was? So basically it hit the bottom of this candle, right? It hit the bottom of that candle. So again, I didn't take the trade, so I'm not going to spend too much time on it, but just what's important is you go back and look at why the market does some of the things it does. And there's clearly an order block right there, right? Right there's the order block, and it just come right to it. I mean, just so close. All right, so that's why it rejected. Now in the Discord, I called out a bear flag break, and guess what? It broke. Again, I was too busy looking at Nasdaq. I did not catch it, but I did call the trade out. If you're a trend line bear flag type person, bingo, there's your trade. Actually, let me undo that. How many pips is that? Right? You could have entered on the break. Let's say close, and you'd be up, 200 points right now, which is good shit. I mean, that's a day's trade right there. I didn't take it, but it's all good. But what are we looking for? So again, on a higher time frame, 2 hour, I want to see 25.75. Okay, we're almost there. I have a limit set at 25.75. Now, why is that? Well, one, it's the 88.6 Fibonacci, as you can see. I have my line drawn there. Okay, so let's just delete this fib to clear up the screen. We already see all this stuff. Okay, well, what else do I like to do to pinpoint these entries? Well, let's look at this fib. From the top to bottom, where does the TP extension lie? Right there. What is that price? 25.77. Right? I think I have my entry at 25.75. Perhaps I should move it up $2, but you get my point. It's right there. If we really dial in this order block here, where the price took off, 50% is at 25.69. Again, if I'm entering at 25.75, we're only 40 points away from the 50% of the order block. All right. What are we looking at now? Actually, the trade might just be right now. We have on the 2 hour, we are now seriously divergent. As you guys know, I like to take 3 dip divergence. All right. Actually, I'm going to enter the trade right now. We're going to call out an entry right now because of this. Look, 1, 2, 3, divergent on the RSI. 1, 2, 3, right to this the 30% oversold. I am going to take a trade immediately after this video. As a matter of fact, let me just see. Let me stop sharing my screen. Give me 1 second. Let's jump into a trade right now on gold. Gold lot size there. We are going to now I have another entry below at 75, but I like this entry here. I'm willing to take that. Okay. I just entered a gold trade. I just entered a gold buy right there. All right. There it is. Now, where should I put my stop loss on this? Um, I think 25.75 is my entry. Let's see where my stop loss should be. Now, technically, stop loss is always 10% for me, right? So this is a big stop loss, but just don't over leverage. 25.50, 25.22, 25.22. That's a huge stop loss. I get it, but just don't over leverage. And let's just see if it, maybe it wants to fill in this order block. Maybe that's enough right there. That's a tap and go. I do have one more entry, like I said, at 25.75, and we're shooting for all-time highs. All right. I'm not closing this trade out early. Well, matter of fact, I tell you what, let's make TP1 right here at the top. Let's show you why I'm thinking this is TP1. Zoom in here. This is then the last order block. This consolidation area is the last order block before the price took off. So let's call the top of that order block TP1. All right. TP1. There it is. All right. So there's my TP1 on this. That is a 3-to-1 trade because of this, because of the larger stop loss because we're so far out. But really, we want to target these extensions up here. And if we can close out a partial up here at TP1 at a 3-to-1, and we start targeting extensions, now you're looking at 4s and 5s, 5-to-1 risk to reward ratio. So Let's see if we can catch that. We're in, again, we're still in the buy zone from the larger time frame, right? We're still in the buy zone. Here it is. And we're almost, we're in the order block. We're in the buy zone. We are divergent. We're oversold. We're close to the TP extensions. If I go into a little bit of drawdown, that's cool. I have another entry right below, and maybe this just wants to reject now and go. So we'll see. It's 11 o'clock in the day. This is kind of the end of London close. Let's see if for some odd reason it just kind of wants to turn around and go. But again, even on the 15-minute, we're divergent. One, two, three. We are divergent. We're getting lower. Divergent on lower time frames, divergent on higher time frames. Let's just see if we can get a push and go here. So, okay, guys, that's it. Again, please look at my dot card. As a matter of fact, let's just share that right now. Share. Let's go back. Let's go to here. Let's go to dot card. All right, here's my dot card that I post. Click on it and you'll see my public Discord. Here's my YouTube you're watching. Twitter, my gram. I'm not really active on Instagram, so fucking I'd rather much fuck meta, if you will, and I'd rather go for X, if you will. Okay, Pip Connect, Andy Peters, Board Ape, BitDogs, Feetopias. Check all that stuff out. Here's a broker that I use. If you guys want to learn how to trade, open up a broker. Carbon Capital is the one that I am currently using. And yeah, let's go. Let's just look at the Discord real quick since we're here. We got extra time. All right, here's my new Discord. Here's the general chat. Here's where I put all my trades. And here's the public. If anybody in the public wants to put their trades, you guys can chat about those there. All right, guys, calling it a day. I'm done for the day. I'm out. Job going.